And I'm back with another answer to a question from a viewer. And the question is, how do you know if the business is profitable? This sounds like a business buyer, and they're looking at different businesses and they're not trusting what's represented from business owners, business sellers. So as an intermediary, I'll give you some tips on, how to know if the business is profitable. First, props for even asking the question, right? Obviously, as a business buyer, business buyers are looking to make money from businesses. It's why we buy businesses. I mean, hopefully there's other reasons outside of the profits of the business that you're buying it. Hopefully you're passionate about the business, the effect they're having on their business community. Maybe you like helping the employees that work there or the customers that service the business. But it's got to make money, right? So props for asking the right question. How do you know if it's profitable? And I'll answer that in a few ways. Number one, financial statements. Financial statements are very important, right? So when I started into business brokerage, I didn't really get what financial statements were. It sounds like something obvious. Specifically, the financial statements are two things: the profit and loss statement, also known as an income statement, and the balance sheet. A lot of people just skip the balance sheet. It's actually super important. Most people focus in on the profit and loss statement. So if you're going to buy a business, you should know it's profitable pretty quick, because you should get your hands on the profit and loss statement and it should show a profit, right? And side note, I always thought it's funny they're called profit and loss statements, because really, isn't it a profit or a loss, right? Unless it's breaking even. And even then it's not a profit or a loss. The P&L, the income statement, it's more specifically the trailing 12 months, or maybe the trailing 18 months, is, if you're a business owner, the most important document that you can manage for your business, to understand it, to speak to it, to make sure it's correct. And as a business buyer, it's where you want to really start your analysis of the business. The P&L is showing you in a given period, usually it's about a year or so, this is all the money that came in, this is all the money that went out, this is how much we kept, this is how we made our money, this is how we spent our money in this period of time. The balance sheet's a little bit different, and a lot of people skip it, but it's super important. It says, hey, since we started this business, it's been changing here or there. We gather some stuff here, we gather some stuff there, we owe some people here, we pay off some stuff here. But as of today, this snapshot is where our business stands right now. It's the accumulation of all of that stuff. Instead of a set period of time, it's looking at, what does the business have? What does the business owe? Think of it like a net worth statement of the business. The question about, is the business profitable? Look at the P&L. Try and see if they're showing a profit. Hopefully they are. Compare it to tax returns. That's something that we talk about in a lot of other videos. Do the P&Ls match the tax returns? But cross-reference with the balance sheet. Does the balance sheet tie out to the income statements? Talk to a CPA if you need help with this exercise. And if you really want to go deep, look for a cash flow statement. Cash flow is a funny term because business brokers use it differently than accountants do, but there is another financial statement called a cash flow statement that separates it out a little bit farther. And it says, hey, these are monies that were used just for financing of the business, or these are monies that were used just for operating the business, and so forth. So how do you know if the business is profitable? You start with the financial statements. You see if you can define a profit. But the next level is to do your due diligence. We hear this term all the time. Business buyers have a right to due diligence. It's a part of our contracts when we enter an agreement. We basically say, hey, if you believe this business makes the money we say it does, make an offer, you can do diligence, and then we'll close. If you agree with us that this business makes money, we'll give you a chance to, I always say, we'll let you kick the tires before we put you in the driver's seat. So how does due diligence work? Again, you're trying to determine, does this business really make money? In due diligence, I like to break it down into three categories. Those three categories are financial, HR, and legal. And then we're going to answer three questions here as well. First question is basically, does it really make the money that the broker or the owner pretends to say that it does? Ask for bank statements. So now you have profit and loss statements. You see what they say they spend their money on and where the money comes from. Check the bank statements. Make sure that the bank statements tie out to the P&Ls. We talked about tying the P&Ls to the tax returns. This is diligence. You keep following the money. The money goes back to the bank statements. Want to make sure everything is there, obviously. And then you want to make sure that the expenses, the ratios, if you will, are appropriate. Sometimes people make far more money than is possible. Some people's expenses are far less than they should be. right? What are they not disclosing? And then, HR is more, do they legitimately employ the people that they say that they employ? We see in restaurants a lot of times. I've seen crazy stuff where maybe somebody in the back doesn't have their papers, so the owner is paying themselves and then paying cash to the owner because they just have HR issues. So that could kind of tie into a financial issue. And then the third bucket I mentioned, financial, HR, and legal. Legal is maybe they do make the money that they say they do, but maybe they're doing it in a way that's just not, you can't do it and not break the law, right? You want to work with an attorney just to make sure that everything is copacetic on the legal side. That's kind of how due diligence works. Our businesses that make money in completely illegal ways, you don't want to buy one of those, right? Or shouldn't be selling one of those. And a broker like me won't get involved if you're doing it that way. And lastly, on this issue of how do you know if the business is profitable? I would call your attention to working capital. It's the most underserved issue when buying a business. And with bigger businesses, it's super, super important. Often people will make a deal, agree on terms and not talk about working capital, but it is important to know how much money does it take on a regular basis to run this business? The most simplistic analogy for working capital is how much gas is in the tank. When you transfer the business, who pays for that gas? When you buy a car at the dealership, they'll charge you for the gas in the tank, right? But maybe you can work a deal where they include the gas in the tank. Maybe it's only $50 on a car, and if it's a $50,000 car, you're not too worried about it. But some of these multi-million-dollar businesses have hundreds of thousands of dollars that it takes to keep them going, just to keep the lights on, to keep the employees paid month after month. And as the business grows, the working capital gets bigger as well. So pay attention to working capital. It can really be an important thing when you're asking, is a business profitable? Sometimes rapidly growing businesses take more and more working capital. They can become less profitable because they're having to feed all that growth back to sustain the sales, right? So the last thing I'll say is, does a business make money? How do you know if a business is profitable? Is look at the officer compensation. More than once, we've seen businesses that are extremely profitable, and it's because the owner is taking shortcuts, especially on labor, and they're doing all the work themselves, right? They know how to do it. Maybe they had a whole team and they didn't like paying them, so they let go of everybody. They're doing it themselves. It's something that only they can do because they started the business. They know they had the employees and they knew how to fill in their roles, but it may be impossible for you to do. So pay close attention to wages and officer compensation. And interview the owner, make a determination of if it's the appropriate amount, and do your research with what other companies spend on labor to determine if it's appropriate. Because sometimes they make too much money, right? There is such a thing as too profitable. I know that sounds crazy. Those are my tips on how to know if a business is profitable. I'm Neal Isaacs. I am the Raleigh business broker. I make these videos to educate business owners, business buyers, other intermediaries, other deal partners of mine, accountants, attorneys, anybody in the deal-making space, because I love this type of stuff. Contact me if you want to connect about a deal. Reach out in the comments if you have questions about this. If you have something specific to a deal that's confidential, obviously direct message me. You can find me online just about anywhere. I am Neal Isaacs. I appreciate you watching. Until next time, mahalo.